Welcome back to On the Money with Ryan Wheelis. He's the founder of Allied Wealth, financial advisor himself. We've been doing some rapid-fire retirement planning questions this week. We're going to be doing it over the next few weeks as well. This has been a big one that I've seen on a lot of different websites. What are the implications of either selling or passing valuable assets, like my real estate or a family business, to my heirs?
Spike, I mean, we help a significant amount of people move from living a life to a life of significance. And it's quite an honor because a lot of these folks that we help and we serve, they're buying second homes. They're giving substantial amounts of money away to charities because they've done well. It's really awesome to be a part of this. And in our private wealth division at Allied Wealth, we've built an entire team of experts around the sale of a business, but also around the succession planning of the business, and even helping identify if any of your heirs are the right mentality and mindset over the business. In some cases, the answer is yes. And in some cases, the answer is no. And then can they even do it? Meaning, you've got a doctor practice, for instance, and the doctor's done very well, wants to sell the practice. Well, if none of the children are doctors, does that mean they can't take over the practice? Well, the answer is no, it doesn't mean that. They don't have to be a doctor to take over the practice. They can still own the practice and have doctors work for them, right? So there's a lot of the stuff we navigate and really, kind of really get through these decisions because they are big ones, and it's not just that too. I've got a guy who owns a water company, man. The company's got to be worth $25-30 million. You know what his biggest concern is? It's what happens to his employees when he sells. He's like, I don't want my somebody to come in and buy this company and rip it apart, and all these people don't have jobs because they've been with me for years, and where I am without them, right? How do you navigate that? And then usually you're given a couple of choices. Somebody's going to come in and buy you out. A lot of times it's a private equity firm, and they're doing they're doing what they call a roll up, right? So your business as it stands alone might get a multiple of EBITDA times 5. But if you put it into a fund that's got a bunch of these businesses together, you might get a roll up of an EBITDA of 10, right? So meaning your multiple is now 10 versus 5. That's a big deal, right? Because you just got double the money for your business. And so when you look at those opportunities that exist like that, what you have to navigate is, okay, which firm is going to be best for me? I just went through this with another friend of mine. He sold his business, him and his partner sold their business for over $120 million. They got into the mode they were going to sell, and they interviewed, I want to say 60 different private equity deals and narrowed it down to 3, and they eventually picked the one that they felt they could work with the most because part of their deal to get the most value out of it is they had to stay on and continue working with this new firm. Well, if you're going to continue working with this new firm and you built a great business, you probably had good chemistry with the people that were there to get the business where it is today. Well, if you bring in a partner who doesn't have the same value system and has a different, mode of doing things that aren't congruent with your mode of doing things, the partnership may not work. And I can't think of anything more miserable. Crap, man, I did this deal. Now, I got the money. It's great, but this sucks. I'm
watching it fall apart.
This is not.
I'm watching my employees want to leave or seeing them be unhappy in what they do and build. And they know the writing's on the wall. You're leaving anyways.
What do? Do you stay on for 2 years or 5 years? Do you take all the money up front, or do you take some money up front plus some equity in the future sell of the roll-up deal itself? And then the next question is, okay, I got this business that produces 5, 10, 15, 25, 35, $100 million a year in income. What do I do with these assets I just got to create the income that I need to still maintain my current lifestyle? Because I don't want that to go backwards. I didn't sell the business to be poor. I sold it to be, wealthy, and I want to utilize that wealth in a way that continues to allow me to either live the lifestyle I've been living or a better one, right? I mean, how do I do that? And then, what about taxes? I mean, what do we do? How do we structure the deal to where it's the least implication of taxes for the family?
Is there much you can do? I mean, isn't the taxation, and this is where I ask your bigger brain, aren't you already kind of stuck with taxes if you decided to be an LLC, a sole proprietorship, an S Corp, or a C Corp? Or can you do tax mitigation and selling your own private business in the aftermath?
There are for sure ways to structure the deal in a very, very favorable tax treatment, and it depends on what you're selling. Sometimes you sell personal goodwill. Sometimes you sell an asset-based company. Sometimes you sell a revenue stream. It just depends on what you're selling. But there are ways to structure the deal where there's, you want it to create the least amount of tax implications possible. In most cases, you're going to wind up at about a 23.8% capital gains tax on the sale of a business that you've owned for 2 years or more. Ways to get that down through selling off assets that are appreciated and taking the depreciation up front. You get recapture issues on the back. But there's things you can do, especially with closely held businesses, that can help mitigate the long-term tax liability. And a lot of people, by the way, Spike, they don't look at those things until after they get the money. They think the person that's structuring the deal, who's buying the company, has their best interest in mind. And the reality is they don't. They have their best interest in mind, meaning the company who's buying your business. So it's oftentimes very prudent to get together with an advisor like us who can help you navigate how to properly structure the deal. And folks, listen, we don't do all this in-house. I've got an entire team of a network of people that help with this kind of stuff. And so it's our group of experts that put together an opinion on how best to structure your deal that allows you to keep more money in your pocket and pay less taxes, and also allows you to figure out the best way to navigate the choices you have to make. And that is, do you stay on for 2 to 5 years? Do you sell the whole thing and for a slight discount to not stay on at all? Or do you sell for part, stay on for 5 years, and then take some equity in the next deal and take less cash? I mean, what do you do, and what are the tax implications of all those things? And how do you structure it in a way to where, if you do take equity in the deal, right, your equity granted to you at a low basis, so when it sells to you at a high point later on in the future, you pay less tax on it, right? Or you pay more, so it's just so much to navigate, Spike.
And then you take into account whatever that business might be. How might things change in the next 5 years, the next 10 years? We're seeing so many fields change so rapidly. So I do think you need to sit down with somebody who's done this again, once or twice at least. You say you've got an entire network of folks. If you're considering that your business is your retirement plan, not just for yourself, but maybe for your spouse and your heirs, get a plan, as you were saying, a private wealth plan. Would you also consider this what is called a family office, kind of taking care of it all in one fell swoop with the same organization, family office?
For sure, Spike. We actually because our network is so spread out, we find the best experts, right, that care where they are. And some of those people might be in California, some might be in New York, some might be in Texas, some might be in Ohio. We don't care where they are. We only care they are the best, all right? Network of people gets together. We figure out what you're trying to accomplish in your case, and we basically do it through a virtual family office, and we figure out the best metrics to go down, the best path to go down for you, and give you some options, of course, and then help guide you through them. But it's basically a kind of a report on here's what you should do about the sale of your business and how to work with it.
Do you have any of those videos on your YouTube channel yet, or are we going to have to create some of those?
We're working on creating some of those, Spike.
Okay.
It's interesting. The demand for that stuff, for the business sales stuff, has gone up big time. It's funny too because I see people go, we're going to go to one of these big name firms, and I'm like, okay, go. I'm just curious. Does that advisor at that big name firm own that big name firm? Well, what do you mean?
Nope.
No. The answer is no. Well, I'm a business owner. I own this business. I built this business from nothing, literally nothing. I have been maxed out on credit card debt more times than I can count. I have been near bankruptcy trying to make a marketing idea work early in my career, Spike. I mean, I've done it all, man. I've been there, okay? And I'm certainly not in that position now, by all means, because we've had a great amount of success here at Allied Wealth, which we're super grateful for, from our client base for sure. But the reality is I have gone through the trials and tribulations of owning a business, and I know what it feels like, and I know these things. And when I say that, most of my people are like, you know what, Ryan, you're right. Let's give it a shot and see what this virtual family office can do. And it's pretty cool because once they find out how we do things and what we can offer above and beyond managing money and investment selection and that sort of thing, it's pretty mesmerizing for folks.
All right, we're going to have to wrap it up today. If you are a small business owner who is considering using either the proceeds of your business or a continuation plan for your spouse and family, there's a lot to consider, and make sure that you don't do it alone. You can call the phone number here. We'd be happy to set up an estate plan review for you, 844-944-7555. You can go to retirenowhouston.com to see so many other different tools. And Ryan, what's the YouTube page there? You have so many other videos that we're going to add to?
Go to YouTube, type in On the Money Ryan Wheelis or On the Money Allied Wealth, and the YouTube channel will pop up with a lot of robust information out there that you can use to empower yourself to make better financial decisions.
And for our radio listeners out there, this is the end of the program, but we will have people standing by to take your phone call right now to schedule an appointment for your own no-cost portfolio x-ray, 844-944-7555. For Ryan Wheelis, I'm Spike Spengel. This is On the Money. We'll both be back next week.